I'm the Secretary of Making Finance of Africa in Abidjan, Cote d'Ivoire. And I would like to welcome you all to our webinar series. Today we are hosting the Global Legal Entity Identifier Foundation on the topic Connecting the Corporate Dot Globally with the Game-Changing Legal Entity Identifier. The GLEIF, the foundation is an initiative of the Financial Stability Board tasked to implement technical solutions that help improving the identification of corporate in such a way that it has a benefit, substantial benefit for the efficiency of due diligence operations by banks and financial institutions, particularly those involved in correspondent banking services. We all know that the cost and the complexity of compliance with international regulations linked to financial crime, especially AML, and the CFT, are having unintended consequences on correspondent banking services all across the globe. We believe that this initiative it's very important. The legal entity identifier is very important for Africa and our corporate, in particular SME, which are often excluded from trade finance operations because of the difficulty in carrying out due diligence operations, and also the risk avoidance that has becomes basically, I would not say the norms, but the practice instead of doing risk management. So we see a lot of benefit for the continent in getting involved in this initiative and contributing significantly to the identifications of our corporate and the SMEs in particular. I will not go into much detail on the concept. We have today Mrs. Sutain and both mentors go that from the Global Legal Identifier Foundation, who will present more extensively on the subject. We'll just take advantage of this presentation to introduce you to a bit on Making Finance of Africa. Just give some highlight. As you can see from the slide there, it's Making Finance Work for Africa is a G8 initiative that's already 10 years ago, hosted by the African Development Bank with the mandate of promoting financial sector development in Africa. We have the visions of having coming very close to universal access to finance by 2030. We bring together the governments, development partners, private sector, all financial sector on the continent. We are sponsored by a number of development agency. You can see their logo down there. I will not be more elaborate on that. Our activities, we work along three main strategic priority work stream, which are financial inclusion, long-term finance, financial stability, and governance. And but we cannot cover all, so we approach these three strategic priorities along a number of thematics areas. Under financial inclusion, you have digital finance, you have agricultural finance, SME finance, you also have housing finance under long-term finance. Banking regulation and supervision, we work with the Association of African Central Banks on enhancing banking supervision on the continent. There are a number of cross-cutting thematics that are listed, like innovative finance, gender finance, but we are also very active with a number of special initiatives. Most of them are sponsored by our partner, the German corporations, and the webinar that we are carrying today, jointly with the GLEIF, the foundation, it comes under our trade finance initiative, which essentially has for objective really to promote trade finance activity on the continent and also improve the understanding of trade finance operation and the challenges and the opportunity that are in that specific area of trade finance. I will now pass on to my colleague, Mr. Mohammed Al-Grebi, who will go over the housekeeping items, such that you have enjoy a lot of convenience in participating and contributing to this webinar.
Thank you, Hugh. Thank you, everyone, for joining us today. Today's session will last for 1 hour. First 10 minutes for presentations, then will be followed by 30 minutes for the main presentation. And last and not least, we will have 20 minutes for Q&A. To ensure the highest quality of experience for all participants will be on mute. Please share with us your comments, your questions, or the Q&A panels. If you have any issue, just email me or message me on Making Finance Work for Africa Secretariat. Last, we will share with you the recording and the survey at the end of this session. Over to you, Hugues.
Okay, without any further ado, I will pass on the floor to the moderator, Mrs. Claire Rowley, who is the head of business operation at the Global Legal Entity Identifier, will be the one that she will manage all the rest of the webinars. We have invited also two speakers, Sweet Hank and Mrs. Montesgo. Thanks, beaucoup. Claire, you have the floor now.
Thank you, Hugues, and thank you to everyone for your participation today. It's great pleasure that myself and the rest of the team from GLEIF have the opportunity to discuss with you the Legal Entity Identifier. I will start out with a brief introduction to what is this foundation, the Global LEI Foundation, the Legal Entity Identifier, and our associated LEI issuing organizations. I will then turn over to Buchu to give an overview of the global regulatory framework involving the LEI, and Xue will give you an outlook on our scale-up strategy. So we have quite a busy agenda, and we will dive right in here with the introduction. So if we could go to the next slide, please. You see here a bit of an overview over who is this Global Legal Entity Identifier Foundation. We are a Swiss foundation inaugurated in June of 2014 by the Financial Stability Board. We are overseen by an organization called the Regulatory Oversight Committee. That includes 71 regulators as well as some observer organizations from around the world. And in particular, from the Africa continent, we have representatives from Nigeria and South Africa participating in that LEI ROC. We participate in a three-tiered system. I've mentioned already two of those tiers. One is ourselves, the GLEIF, and the second is our Regulatory Oversight Committee. And if we turn to the next page, we will briefly mention the third level, and that is our LEI issuing organizations, also referred to as LOUs. So we currently have 34 partners for LEI issuing. And you'll see here also some additional statistics describing the Global LEI Foundation. I make a mention of the number of issued LEIs at the end of third quarter of this year, and that is 1.5 million. Within the African continent, we have not a strong presence today. We have our strongest presence in Europe and also North America, and Xue will talk later about some of our scale-up strategy. Here you see an overview of our vision, mission, and our scope for engagement. Most importantly, I emphasize our vision, that there should be one identity behind every business, and in particular, that identity should be a digital identity. We can turn to the next page. And this gives you a bit more detail on that third level of the local operating unit or the LEI issuer, also referred to as LOUs. So these are the organizations that practically engage with the legal entity. They understand what makes a legal entity in a particular jurisdiction. They are responsible for validation of the reference data associated with the legal entity. And they go through a rigorous accreditation program with the Global LEI Foundation in order to enter into operations. You see on the right-hand side some statistics describing our population of 34 accredited LOUs. Amongst this population, we have 2 LOUs that are located in Africa. One of that is CSCS Nigeria, and the other is Strait of South Africa. We do have organizations, other LOUs that offer services to countries in the Africa continent. It is important to understand that accreditation is granted based on a jurisdictional demonstration of competence. So any organization that can demonstrate to the Global LEI Foundation its ability to validate reference data, to understand the local laws, what makes a legal entity can go forward with offering LEI services in a particular jurisdiction. We can move then to the next page, and we'll talk what is this legal entity identifier. It is quite simple. It is a 20-digit alpha-numeric code that is an ISO standard, ISO 17442. And it connects to some important reference data. It connects to what we refer to as the basic business card information, so the legal name, the legal address. And if you turn to the next page, you will see it also connects to information on the direct and the ultimate parent. All of this information is made available via the GLEIF website as free and open data. This is a very fundamental principle of the global LEI system, and one that is heavily surveyed and watched by our regulators as well as our founder, the Financial Stability Board. On the next page, you will see a demonstration of what the LEI reference data looks like when you use our search facility. If you could advance, please, one page. You see here, for example, we have searched for Nestle, which is headquartered out of the same country as the foundation in Switzerland. And you see here you get the results of the basic business information, the legal name, the address, and then you also can link into the children structure. So those organizations that have some relation directly or in further relationships with Nestle. So you can access our information using this search facility. You can also download files in XML format, and you can also connect to the reference data via an API. So we aim to make this information as readily and easily available to you as possible. With that, I will turn over to my colleague Burcu to introduce herself and go into the regulatory framework for the LEI.
Thank you very much, Claire. Good afternoon, everybody. My name is Burcu, and I work in business operations team in GLEIF. In the next slide, you see major regulations require reporting of the LEI in different financial market segments. According to Financial Stability Board, widespread LEI coverage has been achieved in some financial market segments, notably in OTC derivatives trades and debt and equity securities in Financial Stability Board jurisdictions. In the European Union, you see the one rectangular in the above. LEI is required in many regulations and directives. The most particular and known EU regulation is MiFID II. Starting from January 3rd last year, investment firms are required to obtain an LEI from their clients prior to providing a service that would result in a transaction reporting obligation. This regulation has also known as the No LEI, No Trades rule, which prohibits EU firms to trade with clients who does not have an LEI regardless of where they are domiciled. I would like to highlight another upcoming EU regulation here. This is Securities Financing Transaction Regulation. And this regulation requires LEI not only for the trading counterparties, but also for the reporting party and asset issuer. This regulation will be implemented in 4 phases, and the first phase will start with LEI obligation again in April next year. In some jurisdictions, the LEI is also used in reporting to credit registries and also for supporting the resolution of banks. For example, in the United States, Home Mortgage Disclosure Act requires home mortgage lenders to report their LEI. In India, LEI has been mandated across various sectors in the financial markets, including OTC derivatives, non-derivatives markets, and also for large corporate borrowers. In China, for instance, very interesting, Chinese customs authorities require LEI for imports from 29 countries, including Japan, and from African countries, Liberia, Mauritania, Mozambique, Zambia, and Zimbabwe are also in this list. From Africa, we know that South Africa and Nigeria have published public consultations for OTC derivatives regulations that mandate the LEI reporting as well. However, these drafts have not been approved yet. Next slide, please. The Financial Stability Board has published a thematic review on implementation of the LEI in May this year. This report highlights that higher LEI coverage would support regulatory and industry use cases, such as for AML and KYC, especially across borders. The only downside highlighted was that the LEI coverage remains still low to reach a tipping point where voluntary take-up by market participants can be realized. Nevertheless, Financial Stability Board highlighted several prospective LEI use case examples, such as digital authentication, KYC payment messaging, trade, supply chain finance, e-invoicing, and financial institution resolution. In the recommendations section, FSB provided recommendations to GLEIF, LEI ROC, FSB jurisdictions, and the FSB itself. Accordingly, the FSB will explore potential role of the LEI in its work, particularly on financial innovation issues, work with standard setting and industry bodies to facilitate adoption of the LEI for parent companies and major counterparties of the globally systematically important financial institutions, and facilitate the effective implementation of the LEI option in payment messages to help address particularly the decline in the number of correspondent banking relationships. Next slide, please. And here in this slide, you see that there are a few regulators that confirm and even go beyond the recommendations of the FSB, and the Bank of England is one of them. As part of upgrading settlement messages between financial institutions, the Bank of England will mandate LEI for transactions between financial institutions provisionally around 2023. The Bank of England also plans to extend the mandate for LEI in all payment transactions going forward. The bank also supports that each business in the UK should have an LEI along with the national identifier. As Claire already presented, this is very in line with GLEIF's mission. And the bank also confirms that the LEI, a globally accepted international standard, can help business to better access to trade finance cross borders. So it is very important for us that the bank also confirms that LEIs provide valuable data and support anti-money laundering and combating the financing terrorism efforts worldwide. If we go from UK to India, we observe a very strong support for multiple use cases for LEI. In addition to existing mandates for LEI, recently, Reserve Bank of India announced that the LEI is planned to be used to identify the payment service providers in large value payments. RBI also encourages credit borrowers' parent entities to obtain an LEI for better risk aggregation, and plans to use LEI in blockchain for identifying non-resident derivative contracts. Next slide, please. Thank you. Here I would like to highlight three major industry worldwide support. The first one is the Payments Market Practice Group's white paper, Adoption of LEI in Payment Messages. The white paper highlights that now is the appropriate time for the payment industry to begin its adoption for the LEI, and LEI can bring several benefits. Here I would like to highlight only three of them due to time limitations. The first one is achieving greater speed in processing time, given use of LEI makes several data elements unnecessary. Second, LEI can be a very good data connector among diverse range of data sets. LEI can facilitate the use of artificial intelligence for financial crime by both the public and private sectors. We all know that technologies such as machine learning have the best outcomes when they can rely on high-quality standardized data, and LEI presents this opportunity. Third, LEI is already being embedded into digital certificates, allowing it to be used in digitized financial transactions. Can we come one slide back, please? Thank you. And therefore, the LEI can thereby support authentication by unambiguously linking a digital certificate with a given legal entity. The second organization that supports LEI is International Finance Corporation, and IFC highlights that there are a number of existing entity identifiers. However, LEI has become the authoritative entity identifier for regulatory reporting. A respondent bank might consider adopting LEIs in order to improve its KYC profile to correspondent bank. And lastly, Asian Development Bank is a big supporter of LEI and recently highlighted in their October blog that in correspondent banking, using the LEI could greatly facilitate the provision of financial services to emerging economies and SMEs. ADB has invited corporates and banks to introduce the LEI into their processes related to trade finance. Well, these are the main points from these industry groups that I wanted to share. I would be happy to provide more details in case we receive any questions. Now I hand over to Shwe.
Thank you, Burcu. Good afternoon, everyone. My name is Xu Tan. I work also for GLEIF as Business Relations Manager Team Lead. So as Burcu mentioned, there is indeed great support from both the regulators and industries as the LEI could bring great benefits to smooth data validation efforts, to streamline entity identification process, and also to improve interoperability across different databases. Since the legal entity identifier was introduced, regulatory-driven adoption in capital markets has led to approximately 1.5 million LEIs being issued today. While this is a significant number, LEI volumes must increase dramatically to materialize universal benefits of LEIs among all participants of the digital economy. So if you go to the next slide, GLEIF has therefore conducted an independent study together with McKinsey to measure the impact of a wide LEI adoption to the industry. A voice of the customer exercise was conducted during the study, involving interviews of over 70 stakeholders. There are market participants in financial industry, in supply chain management, and in technical firms. Also, some current LEI registrants and users, LOUs, regulators, and potential global LEI system partners. The main question they need to answer is how legal entity identification looks like. And if you move to the next slide, we can see that from over 50 interviews completed with banks of various sizes and geographic reach, banking regulators and other sector participants and experts, 4 main pain points in client identification and verification came to light. The first point, which is also the most frequently mentioned point, is the manual linkage of entity data from different databases. Today, organizations, especially financial institutions, are expending a great deal of resources and time to manually match data or to double-check matches to ensure that the due terms or reporting or risk assessments about a particular legal entity are based indeed on correctly matched data. And the second point is difficulty in accessing entities' legal ownership structure. Interviewees mentioned that it is rather difficult to understand the entity's structure, especially in the assessment of overall exposure to affiliated entities. The third point is limited transparency into entities' key officers linking individuals such as authorized signatories. And the last point, which is also very important, is the poor customer experience due to having to make multiple round trips to gather client data and documents. The study found that many banks try to resolve these problems by implementing various technical solutions, increasing headcount, or just accepting longer cycle times. However, none of these methods fully resolves any of the pain points. Meanwhile, many banking interviewees responded enthusiastically to the idea of using LEI to automatically match data sets and for processes throughout the client lifecycle. And if you go to the next slide, therefore, of many sectors involved in the interviews that rely on counterparty or client identification and verification, GLEIF has identified banking as a key global sector in which scaling adoption of the LEI could create substantial and quantifiable value in the near or midterm. If an LEI was obtained at the start of onboarding by a bank, as you can see from this slide, many of these challenges could be resolved, and the LEI could support client and counterparty identification at all stages of a client lifecycle management, from onboarding across KYC customer due diligence to commercial credit transactions, to fulfill compliance reporting, and further to risk monitoring and fraud prevention. And if you go to the next slide, to help quantify the global potential of broader LEI adoption in bank processes, McKinsey performed also an analysis on the first sub-cases which we just mentioned in the previous slide, onboarding. So today you can see that on the slide there is a figure to show that banks spend about $40 billion just on client onboarding annually, which of course presents a clear opportunity for improving efficiency and reducing costs. By widely adopting the LEI, banks could unlock an estimated $2 to $4 billion per year, which presents a 5 to 10% cost reduction. And this is mainly through improving full-time employee productivity and reduce onboarding time. By using the LEI to streamline processes for connecting with both internal and external data resources, banks could realize an estimated 14% reduction just in client onboarding times. Of course, client onboarding is just one banking business activity of many where the LEI has the potential to generate efficiencies. As such, that figure is just the beginning. And if banks around the world broaden their utilization of LEIs beyond regulatory reporting in capital markets to other banking business lines such as trade finance, corporate banking, and payments, resulting efficiencies would generate significant cost and time savings. And this is the core of our scale-up strategy, together with our further cooperation with data vendors to enhance LEI's role as data connector via mapping projects. With that, I will now turn it back to Claire to further talk about how to further engage with all interested parties to accelerate LEI adoption. Please.
Thank you. And on the next page, you will see a summary for further engagement. So to recap, what are some of those strong value points of the LEI? First, it is a globally unique identifier. So any party that is engaging with an entity identified by an LEI knows it is a 20-digit alphanumeric code with a checksum. It is persistent, meaning it is a lifetime experience for a legal entity. And even given that legal entity later merges, retires, that LEI remains in the global LEI repository for all historical research. And lastly, open data. The global LEI system is firmly rooted in the principles of open data. So these three principles can really be important for opening doors for SMEs, small and medium-sized businesses, as well as for enabling trade financing within different regions. First, how can the LEI help small and medium-sized businesses? Well, it gives that transparency of knowing easily and quickly who is a person or a company trying to do business with. That allows for accurate identification of counterparties, of suppliers, of customers. So rather than relying on closed or perhaps siloed and proprietary systems, the leveraging of the open data serves to create trust and easy transparency into who one is doing business with. Next, using the LEI can help to enable trade financing opportunities. The Financial Stability Board has noted that corresponding banking relationships are in decline in many regions, and this is largely due to a lack of transparency or a lack of easy awareness of a counterparty. By using and leveraging that global standard and that global open data, a firm can more easily establish its presence. And a third area is in digitization. So we see in Africa that quite often the African continent is at the lead of digitization of financial services, in particular relative to payments. With the use of the LEI embedded in digital services, one can move easily and quickly from transactional level information into understanding who is involved in that transaction. And that again is by simply leveraging the code, which will connect to the open and public data. We do look to collaborate more closely with this community, first today through the webinar, but then through follow-up either at the firm level or association level. We offer some groups, some stakeholder groups for further involvement. One is for financial institutions, something called the Globally Important Financial Institutions Stakeholder Group. And secondly, for vendors of financial products that embed the LEI for their customers, we have a data vendors group. So we very much encourage you to come into contact with us at info@gleif.org in the case you are interested in either stakeholder group. We are also very interested to have one-on-one discussions if there would be some appetite to engage in pilot program, as Shui described, to explore more deeply how the LEI can help either in correspondent banking or in onboarding. So with that, if we go to the next slide, we will open the question and answer session. And already there has been one question submitted, and maybe even two. So give me just one moment and I will pull up those questions so I can see better and then I can respond to them. Okay, our first question is, what gap is this identifier trying to close? So I answered this briefly, but I answered by going all the way back to the origins of the global LEI system. The system itself was envisioned by the leaders of the G20 nations following the collapse of Lehman Brothers and the ensuing financial crisis around in 2008. At that time, authorities within a nation came to realize they had no ability to understand the impact of the Lehman Brothers failure. And furthermore, authorities across nations had no ability to paint an accurate or understanding picture of the risk and the subsequent actions resulting from the Lehman failures. So that was the basis of this coordinated effort to create a system that could be used universally across the world to easily identify legal entities. So if you fast forward to today, we at GLEIF, we have conducted 2 studies focusing on understanding better how is entity identification carried out. One of them was interviewing large financial institutions to understand how they onboard legal entities. With that study, we came to understand that on average, institutions use 4 different identifiers when onboarding legal entity customers. And you can imagine what this leads to due to discrepancies across reference data sets, very high proprietary costs for use of proprietary data. And the second study, this one was a bit more focused on United States. We collaborated with a small not-for-profit organization called the Data Foundation to understand how did the federal government identify legal entities for regulatory reporting purposes. And we found that there were 50 different reporting regimes used across federal agencies to identify legal entities. So this helps to paint for you that very complex, siloed, and proprietary landscape that the legal entity identifier was originally envisioned by government leaders to address. I will move then to the second question that was received. And that is, if a credit decision is based on the information and there is a default to be, is there any recourse to GLEIF? So this is a very good question. So within the global LEI system, there is no monetary liability involved. So indeed, there is a legal structure. So all organizations that issue LEIs, they are required to sign a master agreement and enter into a service level agreement as well with the Global LEI Foundation. They are responsible for verification and validation of the associated reference data. So if there is a problem with the associated reference data, ultimately it would go all the way back to the legal entity owner who had supplied the original information, but there is not necessarily a monetary liability regime within the global LEI system. I then move on to the next question. Okay, the next one is related to the Swift KYC Register, and there is a question, is there any match with the Swift KYC Register? So we do also run a certification of mapping program. In that program, we at GLEIF evaluate and let us say, could it be a data vendor or another organization that is matching identifiers to the LEI? We evaluate their processes and their procedures, and also the ensuing output of matching the other organization's identifier to the LEI. So far, we have 2 certified partners, one which is Swift with the BIC code, and the second, this is actually in process, but that would be the Association of National Numbering Agencies. And we publish also a matching table of LEI to ISIN, and ISIN identifies securities. So relative to the Swift KYC facility, the LEI is indeed matched to the BIC, and you can find that information freely published on the GLEIF website. You can also access it within the LEI search facility. And our understanding from Swift is that there is interest in expanding the usage of the LEI as well within their KYC facility. And I will then move to the next question, and that is, are there good practices, pilot projects for small and medium-sized organizations' adoption of the LEI? Perhaps for this, I would reference you to a survey conducted by Asian Development Bank. So probably about 9 months ago, perhaps even a year ago, the Asian Development Bank went out and requested that some of its small business partners in several different countries go through the process of applying for an LEI. Overall, what that survey found was that it was a relatively easy process, and also one that was not very expensive to complete. So just to be clear, the way the financing of the system works today, it is the legal entity that pays a small fee to that LOU, and the LOU will give $11 of that fee to the Global LEI Foundation. So that is how the funding of the structure works. On average, we see that the cost of new LEI issuance is about $75, and then the cost of the annual renewal is a little bit less, perhaps between 60 to 65 US dollar. So overall, the Asian Development Bank survey found that it is not a very difficult thing to engage in. It's quite straightforward and also accessible in different local languages. So we would encourage perhaps even contacting one of the organizations that are based out of Africa, CS Nigeria or Strait. They can certainly provide more information on the origination process. And if there is a desire to enter into a pilot program as to how to make it more accessible for small and medium-sized businesses, we at GLEIF would be very interested to discuss further. We have quite a few questions, which is nice to see. So I will move through these, trying to get through all of them. The next question, often we hear that trade finance application of small and medium-sized businesses are declined due to lack of collateral, lack of credit history, higher default risk. Do you think that having an LEI would really ease the life of SMEs, of small businesses in Africa, to access trade finance products? So this also is an excellent question. So the scope of the legal entity identifier, it is very straight and very clear. We are the LEI, it connects to the reference data to identify who is the business and who is the business's direct and the ultimate parents. So you may say to yourself, well, how does that help with these other data points, collateral, credit history, default risk? The key is that what the LEI does is it helps to bring information together. So rather than relying on a whole host of different identifiers, it enables an easier view into, well, who am I considering for trade financing? And then into other platforms that contain information on the credit history, etc. So I suppose I refer back to that specific phrase in the question, the ease the life of SMEs in Africa to access trade finance products. By establishing a globally recognized identity, we do believe that it does make communications and especially the due diligence of the organization that is conducting due diligence, it makes that easier. Just to give you anecdotally, one small history, we had an organization that was based out of Japan, and they were looking to enter a contract with an organization based in Europe. And so the organization based in Europe, they had asked for the basic information from the registry, of course, which was in Japanese, and the organization in Europe says, well, we can't understand this, and we actually don't have any budget or anything to conduct translation, so I'm not sure we can go forward with this. And the organization in Japan said, well, as a matter of fact, we also have an LEI which conducts the transliteration necessary within the data record. And the organization in Europe said, well, that's great, excellent. We now know who you are, and we're willing to go forward with the contracting process. So again, by using that global identifier, leveraging the open data and also the usage of different languages within the system, it does help to more easily engage in business transactions. Moving to our next question, I read this out. It is, I believe you said there are 1.5 million LEIs. What percentage of applicable entities does this represent? Well, if you read through some of the Financial Stability Board assessments of the global LEI system, they are quite bold in even saying there are hundreds of millions of companies out there, all of which could be registered for a legal entity identifier. Right now, as Buchu had described, our growth has been largely through regulatory implementations. And we started first with the core of the derivative markets coming out of the financial crisis, and now have moved outside of that into securities and fixed income with some of the implementations, MiFID II in Europe, and now going into payments, as Burcu described, in UK, also in India. So what we see, this 1.5 million, is just a step forward, but we have quite some work to do to grow that population. Our goal is within the next few years to grow the population to 20 million, and that would include expanding into payments as well as putting to practice the strategy of using the LEI for onboarding of clients. And then the last question I have here is about quality. So specifically, it is, what is the integrity of the source of data? And this is really a very core principle and something that we at GLEIF devote quite a bit of energy and resource to. So there is a quality chain that sits within the global LEI system. First, you have the information to this LOU. The LOU is then responsible to go to a local authoritative source and validate that the information provided is an accurate representative of the legal entity. Very important to note that local registration source, we call it the registration authority. It is standardized within the global LEI system. So we have a list of over 700 registration authorities from around the world that are used at the local level to validate reference data. Just to give you an example, you may say to yourself, well, why are there 700 plus local registration sources? We give example of Germany. In Germany, the registration of a legal entity occurs at the local court. And there is more than, I believe, 70 local courts that exist in Germany for legal entity registration. So any one jurisdiction can have more than one registration authority, and that can also vary based on the type of legal entity. So for example, if it is a fund, from time to time, there is official registers of funds. If it is a foundation, there may be official registers for foundations. And then you have your traditional corporates, which may be in a separate register. In order to become an LOU and to issue LEIs, an organization needs to demonstrate to GLEIF its ability to access these sources, to know what type of legal entities are contained within them, and then to demonstrate via test cases its ability to conduct that validation. And then the last step in the data quality chain is us at GLEIF. So we have a rigorous data quality monitoring program. We have checks. There are over, I think there's close to 100 checks that are applied to the file that is delivered to us from these LOUs. And we look at the consistency in information across the data supplied by the LOU. We also look for consistency compared to outside data sources. So we see that it's very important. It's one thing to say data is open, but data that is open and not of high quality is not very meaningful. So quality of data is something we spend quite a lot of time and efforts recognizing. So I look through there and I see that this brings us to the end of the questions. So perhaps I will just take a pause and see if there is any final questions that like to be submitted. And if not, then I would turn back to Hu and to Mohammed to bring the presentation to a close.
Mrs. Claire, there is another question from William.
Oh, I see one additional question. Okay. In the United States, we have the Uniform Commercial Code that registers any and all lien on capital goods. Would information in an LEI cross-reference this information to assure that a borrower is not overextended? So again, the LEI reference data that is open public data, it would not necessarily, it would not contain this cross-reference. It may be that in databases where you have accessible the Uniform Commercial Code, that the LEI is also available to create that connection between the two, but it would not be accessible in the open data that is published on the GLEIF website. And I see another question here that has come in. How would you see the peer pressure argument for companies to have an LEI, and especially not many companies in Africa have an LEI yet? SMEs may consider an average annual cost of $70 may be too high for African SMEs to undergo the application effort unless there is a need to incur these costs. It would be great if you could go into this a bit more. Indeed, as Shui described, right now our business model, it is something we give quite a bit of concentration. So the founders of the global LEI system, that being the regulators, the Financial Stability Board, originally what was put in place was a system where the legal entity made the payment for the LEI. And this was really to ensure independence of the system. So it is not dependent on any one regulatory power. It is not dependent on any one private entity actor. Rather, it is completely disaggregated, and the funding is coming from the legal entities themselves. That was fine for the first phase of development, focusing on the derivative markets, focusing on securities, fixed income, where you have financial market players that there really is no problem for this small amount of fee. But if you look beyond it and you expand the LEI to many millions, you start to say, well, first of all, that cost per LEI needs to come down naturally. But second of all, what is the correct price point for smaller organizations? Part of the reason we desire to engage with the banking organizations is we have already quite a strong foundation. And what we start to hear, especially coming from this study conducted by McKinsey, is it's starting to become harder for banking organizations to do business with entities that don't have an LEI than it is for them to do business with entities that have the LEI. And basically, once you reach that inflection point where it's harder to do business with entities that don't have an LEI, you start to see more willingness, especially coming from the banking sector, to perhaps subsidize the cost of that LEI. So we see it as a combination of two approaches, of the use of the LEI becoming more and more broad, moving into payments markets in particular, where it really just becomes a natural piece of doing business. But secondarily to say, well, who is getting the greatest benefit today of having this LEI? And really it is those organizations that are using the LEI for aggregation and risk analysis. So also trying to say, well, let us try and put the costs also to the parties that are getting the most benefit. I see we are now getting to the top of the hour. If there is more desire to gain more information, we certainly remain available and can be accessed via the info@gleif.org, but we would like to explore that topic of expanded coverage more deeply with interested participants. And I turn back to you, Mohammed.
Yes. Okay. Thank you, Claire. Thank you very much. Okay, sorry, there was a bit of echo back. So thank you very much for this very, very informative and lively presentations. We definitely learned a lot. I'm not sure we can do justice to the subject, but actually the purpose of this presentation was actually to start the conversation on this new initiative or concept, the Legal Entity Identifier. We can see that it has a lot of benefit, related benefit, the cost reduction, the reduction of the cost for time for onboarding the client, and We know these are some of the drivers of the de-risking on the continent. There are several aspects, but certainly it's amongst some of the most important driver of the de-risking phenomenon. So, and we know the African jurisdictions are among the ones that are most hardly hit by the de-risking phenomenon. So any initiative that can really help reverse the trend and improve the due diligence operation on the continent are more than welcome. We would like to see an uptake on the continent on this LEI on the continent, and because it's becoming, as we can see, kind of becoming international standard. So we would like to see this uptake on the continent. We are happy to work with you and other partner or parties that can really help to improve, because this is at the heart of our business. Trade finance is very critical for the development of Africa, and compliance is sometimes like in the first stand between the development and the development objective and the business of objective. So we really want to see this change. But what I can simply suggest that at the end of this, when we close down the platform, you have a questionnaire that will pop up. You please respond to the questionnaire or fill in the questions, and provide any comment that can really help us to continue this exercise and provide some insight on the way forward. We really welcome your views. I would not say more on that. I would just like to stress our to comment the speaker of today's Burku Ujo. Let's go. And Mrs. Susan, I would like to thank also Mrs. Claire Role, our moderator. She has been very active. It's not very often that we have moderator, but it has really helped really to provide a lot of clarity on the subject. Thank you very much for your time. Thanks for those of you who has connected from very far. We're happy, and there's more to come on the Making Finance Work for Africa webinar series. Bye-bye.
Thank you very much.
Thank you, and thank you, Mohammed.
Bye.
Bye.